Hey Bulls, how we doing? What's going on? It's Chase here at Ever Bullish, making a free video for the Reddit community as well as the YouTube community, and first and foremost for my Substack community. So I've got a great strategy today for this week and going forward. This is a strategy I will trade. I'm going to outline everything for you. This is called a straddle. This is a net debit straddle. It's also called a long straddle. And based on the previous videos that I've made and everything you've been following, you know that my ideas here are that I don't love the market. I don't love Russia. I love the fact that interest rates are going to be coming up to tighten our economy a little bit, but I don't think the market loves it as much as I do. And then finally, we just have massive valuations in clean energy, in tech, and innovative technology. So what are we going to short? Or not short, what are we going to trade? We're going to trade ARK. Kathy Wood, the dream woman Kathy Wood. We have the ARK Investments Innovative Technology ETF that she runs, and it's been getting completely pounded. My idea is that I don't know if it's going to go up. I don't know if it's going to go down, but I do know that it's not going to stay the same. So doing what brokers won't do for you and what I do for you, consider subscribing to my Substack. If you like this, I put out content like this all the time. And my goal right now, I'm number 7 in the world on trading Substack, and I want to become number 1. So help me out here. But what do we do, Bulls? Every time we go to investing articles first. Here in investing articles, you're going to see that I had the Substack preview. If you're interested in the Substack, click on that and see what I did. We sold out. I had all my customers as well as all my bulls and all my followers sell out on Tuesday. We missed some of the volatility. We did miss Friday on the way up, but remember, here we're trading volatility. So we're going to click on the most recent article. You're going to get an option to subscribe here if you like. But here we are. So again, I am the Stock Sherpa. I am Chase at Ever Bullish, and I am the YouTube portfolio manager. So here we are. I'm going to have to zoom in a little bit. Yes, perfect. It worked. So my thoughts here, in commentary, like I always do, up, down, but probably not sideways. We're not sure what the market's going to do, but we know that the long-term economic shocks and the midterm and even the more myopic short-term economic shocks are going to cause us to likely not trade sideways. If the market hates interest rate changes as well as the Russian deal, we're going to see ARK go down like it has the last couple of weeks. If we see a recovery and a base, it's going to go up like we have seen it in the past. So bulls make money, bears make money, pigs get slaughtered. That is actually donate to my website if you're interested in the form of a cup of coffee, and I am here in a coffee shop making this video for you guys. But here we are. Let's get straight to the strategy. No more hyperbole. Let's just talk about what's going on. The textbook definition of a long straddle is consisting of one long call. So that's bullish, right? We got to buy the opportunity to buy a stock at a cheaper price than what it's currently at in the future. Then we're also going to buy a long put. So we're going to buy a put, which says if the stock drops a certain amount, we'll start making money. So what we're doing is we're carving out a range in the middle where it's currently at, and we're betting that it's going to get outside of the lines on either side. So this is going to be a net debit. This is going to cost us money. Once we pass a break-even point on the top side or the bottom side, we'll be in the money. There is potential unlimited upside to this and substantial downside protection as well. So just a quick example. I stole this from fidelity.com. We have a break-even stock price at expiration, right? In this example, we have $100. So we have a strike price plus the total premium on $100 strike price. We paid $6.50 for it. That's $100, $106.50. On the second one, this is the put. We're going to do the very same thing here, and its strike price minus premium is $106. We'll be making money in the future, and if it's under $93.50, we'll be making money in the future, and it carves out this V. I think you guys get that. And remember, you can actually profit on both sides. If it goes down in the future, we sell the call or the put, that is profit, and then it comes back up above that, we also make money. So there's an opportunity for arbitrage if we have a steep movement early down or a steep movement early up. So what's the Sherpa's hypothesis? Where are we? What are we doing? Get to the trade, Chase. Hurry up, turn it on. My hypothesis is straight up. Y'all know that I'm bullish. I'm more bearish rather. My hypothesis is that I'm more bearish than bullish right now. That's why we sold out of my professional portfolios. We have headwinds in the form of interest rates, tech high valuations, and sectors. Tightening monetary policy as well as geopolitical tensions like Russia. What does that spell? Give me a V, give me an O, give me an L. Yeah, you get the picture, right? So I'm not going to spend too much time explaining what Kathy Wood's ARK investing is. If you're following me, I already know. But basically, it's a high vol um, serious moving stock, right? This is a stock that is invested in very high volatility, and that's why it made a couple 100%, I believe, last year. Um, not 100% last year, more than doubled, and now it's down quite a bit this year. So I'm rooting for success, but in the meantime, I'd just match up a straddle. Unfortunately, when I made this, you're gonna have to go to my Substack to see it, but you can see the chart there. It's right at $69. $68.91 right now. Here's the profile. It's got Roku, Teladoc, and Tesla as its top holdings. So remember, we're trading those big moving names. But right now, here's exactly what I want you to do. Feel free to pause this if you're watching on YouTube or on my Substack. Right now, it's at roughly $69, and I'm looking at a 2-month chart above. So why not look at a 2-month option, right? 2 to 3 month option chain with a strike of 70. So we're basically at the money on our options, and we're just going to buy the at the monies. So remember, you're having to pay here. So in this example, $70 strike price, meaning that in the future, and I'm looking at the April 14, that's 76 days from now. I'm looking at the at the monies in today's time, and that is $70 strike price. I want to buy the call, which is $6.35, and I also want to buy the put, which is $7.85. Let's do the simple math. On the April call for 70 bucks, 635. On the put, it's going to be out of our pocket, and it's going to be $7.85. So that's leg one and two. The net cost would be $14.20. So this is going to cost you, if you just do one option, this is going to be what? What does that add up to? You add two zeros to that, so it'd be $1,400, $1,420. So what that does is that's going to put a profit range anywhere ARK goes below $62.50 and anywhere above $76.35. Those are break evens. I just don't want it to stay where it is. That's basically what we call buying vol. We're buying volatility, right? Here's the chart below. Check this out. This is the 1-month chart. Remember, we're in 1 month, we went from $94 all the way down to 68.91. So that's a 30% move, right? Simple, dumb. 650. In 3 days, it has gone at times down from 95 to 85. That would already put us in the money. So real simple. I'm not going to over explain this to you, and I'm not going to give you too much positive emotion on this trade because it could still not work. But I'm betting. That's it. Very simple. Just a bet that ARK does not stay in the channel that it's currently in, and that we'll have 74 more days if you bought this on Monday to take advantage of the move in the amount that it's made in the last 3 days. And that makes me very, very, very probabilistically bullish on taking advantage of the volatility and using it as your friend. You don't have to pick a direction here. You just have to pick movement here, right? So that's, again, remember, ARK is ARKK. This is the Dream Woman Kathy Woods portfolio, and this is one of the ballsiest portfolios in the world to invest in. And all you have to do is buy it and follow on this trade, and you'll make some money. So if you appreciate this content, remember, happy trading. As a reminder, my goal is to be the #1 trading Substack in the world. I'm at number 7 right now. And if you go join the Substack, it's 20 bucks a month, 200 bucks a year. And you can use the money that you make on this trade to buy my subscription and get info like this around the clock. I typically put out about 4 to 5 posts a week. LGR, let's get rich.